Well, and also you left out Bob Mundell, truly a giant in international monetary economics. So it certainly has been a treat to be at Columbia all these years. We're definitely in a K-shaped economy. I think we've been moving in that direction for 30 years, not in a straight line, but the trend has definitely been in that direction. I think the events with the pandemic, the policy response, and the like amplified some of those trends. You know, in America, if you own your home, as 60% of people do, and if you own stock, you've had a very good run. But that means there's a substantial fraction of the country that has not been participating. Maybe if I can just parachute a bit in on this. You know, at the Fed, when the economy slows, you cut rates, and I certainly did that at my time at the Fed. And the Fed understands that when it lowers rates, it's going to support the labor market, which is good. And for a lot of people, that is their stake in the economy, is their job. But low rates also lead to higher asset valuations and also leads to some of the trends that you've mentioned in the K-shaped economy. And so I think central bankers understand that, but their toolkit is really pretty limited. So I think that's how we end up with this dynamic.
How does the Federal Reserve or any central bank deal with a black swan like, I don't know, a war in Iran that came out of nowhere? I mean, how does a Fed typically look at those types of events?
It's difficult to predict black swans almost by definition. So what you try to do is you try to do analysis. You try to look back at history. You know, history doesn't repeat, but it rhymes, as the saying goes. And so I'm sure at the Fed they're looking at past oil shocks, past Middle East conflicts, but they'll also have to factor in, Paul, that it's a different U.S. economy than, you know, back in my college years in the 1970s. In particular, the U.S. is a net energy exporter.
Yep.
Important, however, is in the Fed's models, it's still the case that when energy prices go up, the economy slows. And I think the main reason for that is it erodes real incomes for a lot of workers. Also, the fact that the U.S. imports a lot of goods that have a high energy content. And so, yes, you better be an exporter than an importer, but the U.S. is not insulated from this shock.
My Karl Marx comes from the giant Thomas Sowell out at Hoover, and also from my great mentor in London, Meghdad Desai, who we lost last year. Karl Marx sat in the British Museum reading room and wrote a treatise on the end of capitalism. And the bottom line is, by definition, we become ever more K-shaped, ever more divided, and there's corrective solutions. Do you worry that within all of the institutions, as you've represented, that we're getting to stress points where it falls apart?
Well, I'm not sure of that, but certainly the trends, as I mentioned, since 2020 have definitely moved more in that direction. I would point out, though, that we have had periods not all that long ago, you know, certainly in the last part of Obama and during the first Trump term before the pandemic, you actually had some of those K-shaped trends reversing and improving. At the lower deciles. And I can certainly tell you that during my time at the Fed, it was one of my focuses. That's one reason why the Fed got a lot of criticism for cutting rates in 2019, because the unemployment rate was below 4%. And some models were saying, you can't operate the economy below 4% unemployment. And our attitude, let's see how the economy operates. And I think that was a positive development. And so I think policymakers do need, when they are in a healthy economy, to allow the economy to reach its potential.
Well, one could argue, I mean, the war notwithstanding, the economy is generally performing well in terms of growth. The unemployment still looks like at or near full employment.
Yeah, sure.
I guess that's a recipe for the Fed to say, all right, we're doing our job and maybe we can just stand down a little bit. Is that what you expect the Fed to do over the next several meetings?
I do. I think that they've pretty much signaled that the existing Fed, before Kevin Warsh arrives, is happy right now to step back, see how the economy evolves with its energy shock. It is interesting, though, that they did indicate that most of the members of the committee still see at least one cut this year and next year as appropriate. And so I would think that over time, Kevin Warsh will be able to get the committee to cut rates at least a couple more times, but it may not happen for a while.
Richard Clarida with us, folks, of Columbia, of course, of Pimco as well, global economic advisor and the former chair of the Federal Reserve, former vice chair. I was going to give you a promotion there. I'm sorry.
Okay.
Former vice chair, the Federal Reserve System as well. Okay, I got to get you in trouble. Please. Governor Myron was in with John Farrell. John, I thought was great. Grilled him. There's a Fed reacting after the fact, folks. John Tucker told me the Latin is ex post. And then there's this whole dream of getting out front and fixing it before it screws up called ex ante. I would suggest Governor Myron is not nearly ex post as his brethren at the Fed. He genuinely wants to get ex ante. Is there any evidence of a successful central bank trying to get out front of the model?
Well, you'd have to look pretty long and hard to find that.
Biblical times? Are we back to the Old or the New Testament?
Models are tools, but they're backward-looking. And in particular, I think oftentimes the argument that Governor Myron has made is he has a personal individual belief that the neutral interest rate in the U.S. is well below the current level and well below where the committee believes. He could be right, but I don't think that is the view on the committee. So I think he'll continue to be a minority view on that.
You mentioned Mr. Warsh taking the Fed chair seat later this year in several months' time. I'm not sure we've got a path for that to happen. How concerned are you about some of the noise surrounding that whole situation?
Well, I think it's pretty clear now that in order to become Fed chair, you've got to be confirmed by the Senate, and to be confirmed by the Senate, you have to have an affirmative vote in the banking committee. And right now, Senator Tillis has indicated he will not support any Fed nominee, including Warsh, who he thinks would be a good choice, until the current situation with the Justice Department, subpoenas, and the Fed is resolved. And Powell more or less said that himself, that he's not going anywhere until it's resolved. We do think it will be resolved. We do think eventually Warsh becomes chair. The timing of that is uncertain. Whether or not it happens in time for the June meeting is too soon to tell. But we do think eventually that it will get resolved.
The first thing I did with AI, Tom Secunda, one of our founders, grabbed me by the Cheez-Its rack in the food court, said, we need a briefing. And Mr. Secunda's leadership, folks, on AI is noted across a 10-state area. Richard Clarida, he said, here's AI, get up to speed on it. Richard Clarida is up to speed on AI right now. Is it a job creator or is it a job loser?
Well, right now it doesn't appear to be either in the data, and I think there is as many opinions on this as there are people that you talk to. Myself, I'm skeptical that in the next year or so we're going to see a dramatic change in the labor market because of AI. The models are impressive, but the analogy I like to use is even their developers admit that they hallucinate. Hallucination is a feature, not a bug. And I don't know about you at Bloomberg, but I can tell you at Pimco, we don't hire a lot of employees who say, part of my job description is I'm going to hallucinate. And so I think until they figure that out, it may not have as much an effect on the labor market as people think.
You and I used a Kufel-Esser slide rule. Okay, the only way you can learn logs is a slide rule. Remember when the Hewlett-Packard, only the rich kids had the Hewlett-Packard calculator?
What was it called? Reverse
Polish notation.
Reverse Polish notation. I got one on my phone here. But to me, it's the same shift where the professors are going mental in class. You can't use your calculator and all that. And we're just going to deal with it.
I think we're going to deal with it. Yeah. And remember that near term, in order to get the nirvana of AI benefits, there has to be a lot of capital spending, data centers, power generation. And so the interesting thing about AI right now is that it's really a driver of a lot of the old traditional bricks and mortar economy.
One final question.
Yes, sir.
Jerome Powell. You've been a staunch defender of him. He's had a pretty good 10 days a week here. And so the governor is well under duress. What's his value add to the American people to serve out all of his different tenures?
Well, I think it's important. I think Jay Powell recognizes that the first sentence, and eventually whenever his New York Times obituary is written, is he wants to make sure that it says something along the lines as Chair Powell restored price stability and maintained the Fed's independence. And I think that he is going to achieve that.
Thank you so much. Richard Clarida coming. Wait, was this okay that we didn't do monetary parlor game?
But can I also say, it must be opening day, because Mr. Keene's wearing a, tomorrow probably.
For the Red Sox.
And then Mr. Sweeney, of course, my God, where's the Duke?
I know. We're Duke.
And are you going to the game?
Not going to the game, but it'll be a great game against St. John's.
I'm afraid to ask, how's your bracket?
Yes.
Well, I'm a loyal alum of the University of Illinois, and I picked them. So at least on that part of the bracket, I'm doing pretty well. Although, I got to tell you, what is this playing a tournament game on a home court for the number 2 seed?
Yep. Do they have a bracket pool at the Fed?
Oh, yeah.
All the PhDs, all the staff and all that?
I think so.
A lot of analysis
there's some ringer there that, like Vince Reinhardt years ago was winning 3 years in a row.
Anyway, go Illini.